Okay, let's do a quick trade breakdown, trade explanation. We start the day and we notice the price is moving kind of towards the upside. We have a bit of consolidation. But on the 4 hour and the 1 hour, we need to ask ourselves, where is the liquidity? The most recent liquidity in this vicinity, in this area that we're trading in, or that we have now, where is the liquidity? Then we can also look on the high time frame more towards the left and identify the liquidity there as well. So if we just quickly plot our anchored text and liquidity areas, we'll be looking for order blocks, previous highs and lows, just the previous high and low as liquidity areas. In the most recent vicinity, we have a previous high over there that has not yet been swept. So we'll look on the 1 hour now to just get more clarity. So this is the 1 hour, and we can see that in the previous day, Friday, which is Friday, this was the high of Friday. So obviously there's liquidity above previous highs and low, previous days high and low. So we can use that to our advantage, that we now know that in this block, in this area, we have liquidity. We do not yet know where exactly, but let's keep it blue. We know that in this area we have liquidity. Now we can look at a few things to refine this area a bit further. If we look to the left now, you can see this on the 1 hour, there's a range because we have wicks and wicks towards the upside. There's a potential range in this area. So we'll drop down to the 50 minutes, the 5 minute, and look at price action in that area. The idea is to refine our range of liquidity, to pinpoint that the exact spot of liquidity where price can potentially reverse from. So we have this area where price pushed towards accumulated, pushed towards the downside. We have a range here that has not been mitigated yet. So we can take on the 5 minute, we can take that high and that low, which would then be the order block, and we can see we have imbalance there as well, which would, we can probably just place that imbalance there as well. So now we're starting to form a deeper understanding of where the current liquidity is within this zone. So we can see that price potentially in this area. That is now our region of where liquidity is. So we can also look at the 15-minute time frame, and we can take our projection. If price is expanding massively towards the upside, then the projection is usually 0.5 increments. So if we take the projection block from the low towards the high, we can note that the 0.5 is exactly in this quadrant towards the upside on the high half. So we'll be filling the imbalance. And we'll be tapping into that area. So potentially we'll be looking for sells from this area with a stop loss above, and then targeting the lows where we have the order block down here below. So that would be the trade setup. Let's see how it plays out. We see price pushing up, tapping into that area exactly at our 0.5 in that zone. So we have a clean entry. Now we can drop to the 1 minute and we can look for further confirmation entries. Let's try to understand and see how the 1 minute behaves and reacts. So here we have our first one. So we have this candle. We have a break in structure over here. So there would be our first scaling entry in this area. Anyway, there's our first entry. Now we play along, seeing more structure breaks. So here we have a nice structure break towards the downside. Breaking this structure down, we have potentially this area for another sell. So stop loss above, take profit also at the lows over there. So there's the second entry, actually the third entry already, and we then see price moving towards the downside, tapping our take profit area. We could have also watched on the 3 minute time frame and saw that the 3 minute time frame created this zone again here as well. Nice full body candle, impulsive move towards the downside, some imbalance left there, and 50% stop loss above. Same trade, we have it towards the downside. So in Reds, let's quickly review and just to put all the puzzle pieces together. We identify the previous high and then we're looking for where's the liquidity. So first of all, we have this area. That is the range, that is the region that we're looking at. We don't know where, how high, where it's going to stop, but we know above this high we have liquidity. So there's another thing that we can add is pip ranges. Just wait. Another thing we can add is pip ranges. So we can look at 10, 20, and 30 pip sweeps. So we can place the look at where is 10 pips. So we have 10 pips right there. There's 10 pips. And then we can also look at 20 pips. So those are the two quadrants that we can refine. So potentially we start off by looking at this region. We have 10 pips and 20 pip sweep ranges in here. Then looking at our order block that we found to the left, we can see that we can narrow it down potentially towards this range because that aligns within the 20 pip range. So we can take it out, extend it. Then we can also look at the projection tool and we can find the pinpoint accuracy of where price can potentially reverse. So we've used previous high, previous low, but we've also then used on the lower time frame, we've used order block and imbalance, which was also a previous high and low. So if you look at price action over here on the 1 minute, we can identify that would have been the liquidity area. So looking back then, that is how we would have framed this trade, scaled in and applied basic principles of using the Asian session, using the projections, and using liquidity zones, identifying liquidity to get a reversal area. I hope that makes sense and that you understand it. So I'm speaking to myself as well. David, understand this, remember this, and apply it in your trading. So just want to add in summary for us all. Let's make some notes, quick notes. So the Asian session was trending. So looking for 0.5 increments in projection blocks. Then we also have this. Then we also have the liquidity zone. Find liquidity order block. Pips liquidity sweep. That is then the things that we can look at. So that is then our notes, and we can apply it to our trading. That is it. Goodbye.